What is up, guys, and welcome back to my channel. I'm Financial Coach Jess, and today we are doing our very first cash flow form walkthrough together. I am really excited about these series, and let me know in the comments below if you like this video because I will do a lot of them. I have a lot of cash flow forms that I can use, and just to remind you, I talked about this in my What Happened to Financial Coach Jess video, but basically these cash flow forms are real cash flow forms that I've gotten from clients. This is kind of like their intro homework that they have to do. I go over the cash flow form before we meet for our first session. That way I know kind of where they're at. I can have a list of questions that are very specific to their situation and what information they give to me. And like I said, I've got a lot of these, so if you like these, I can go through a lot of them. I think it's going to be super practical for you guys to see real life numbers. No two cash flow forms are the same, just like no two clients are ever going to be the same. They will throw all kinds of things at you as a financial coach, and it's good to be prepared and see what all is out there. So got my computer here. I'm going to put this cash flow form up on the screen for you so that you can see as we go through. And something really important that I actually want to point out as we get started. This one in particular had my old logo, so I know that this was like in the very beginning of my coaching experience and adding coaching to my business. I was still Jessie Marie Bookkeeping at this point. And that's really important because these cash flow forms are probably going to be a little bit all over the place if they have my old branding, because I was still figuring it out. I was still taking messy action. They're not going to be perfect. They may not even be super ideal, and I'm sure that you guys will see that. I think it would be cool as well to kind of see the evolution of the cash flow forms as we go through them and what they have now evolved into and what my clients receive and send back to me. Something else you might notice as we go through this is that some clients will give me below the bare minimum as far as information goes, and some clients will write out like every detail of their life and send that to me. And both are totally okay. That honestly speaks more about the client to me, and it kind of prepares me to know what I'm walking into on the first session. If someone barely gives me any numbers, they might be really busy, they might be really embarrassed, they may be not processing what they're going through and what the numbers are. Maybe they don't want to look at the numbers. That tells me a lot going into the first session and how I can ask questions and pose things, versus if someone is, like I said, giving me every detail about their financial situation, they may be in a very different place mentally. That's really good to know going in. So kind of a pro tip for you guys as well. So let's jump into this one. Here, we've got the monthly income, and we won't really know since these are anonymous. I don't know if this is an individual, if this is a family. I know that that changes the story a little bit. If this was a single person living in kind of a standard cost of living area, this would probably be okay, if not a little bit on the lower end. If we're talking like a family of 4, a family of 5, this income obviously would not be able to sustain them in the space and the food and the necessities that they need. So I take a look at the income. We don't know a whole lot yet, so I'm going to come back to that probably later. Let's scroll down and take a look. Okay, so this answers a little bit of those questions for us. So the rent is $200. This most likely means that they are living with family, that they are living with roommates. We don't know what the situation is, but we know that they're not paying a standard rent rate for a 1-bedroom or a 2-bedroom apartment. So that right there already makes me think, okay, here are some questions I can ask them about their living situation. Is it what they want? Do they enjoy living with family? Is it putting some strain on relationships? Do they like their roommates? What does that look like? Their rent is really good compared to their income, but that doesn't necessarily tell us the whole story. If they're really suffering relationally with those people that they're living with, it may not be worth it necessarily. So that's an important piece there. Scroll down, didn't give us a whole lot of electric, trash, phone, internet. That's kind of what makes me think it's family. Moving on to groceries and restaurants. This is an interesting comparison, right? So this is very typical for my clients. They come in, restaurant, I would say like 90% of the time is more than groceries. I don't necessarily tell them, hey, these numbers should probably be flipped. But what I do is I ask the client, what do you think about these numbers? What do you think about the groceries and restaurant budget here? And again, 99% of the time, they'll say, these probably should be flipped. People are not dumb. I don't need to embarrass them by saying, hey, you're eating out too much. That's not even really my job as the coach. My job as the coach is to help them see it and to help them make the best decision for themselves. And sometimes they say, this really works for my lifestyle. If we go through the budget and we come down to it and they're not in the red, if it's budgeted accordingly to their income, then there's nothing wrong with that too. Moving on down, we've got gas. That looks pretty normal. Repairs, tires, oil, license, taxes, insurance. Insurance, I do have a section in my program where I encourage them to talk to their insurance provider and see if there is anything else that their insurance provider can do for them without taking away any coverage. So what that might look like, to give you an example, a lot of my clients are able to pay for car insurance every 6 months instead of every month, and they might save 10 to 20% on their insurance. So we're not changing their coverage at all. Again, that's not my job, but we're still able to save a tenth or maybe even more by paying upfront or once a year or twice a year or quarterly. So $150, I would definitely encourage them to possibly shop around. Just make sure that that's going to be the best deal for them and the best coverage. I don't give any advice on what coverage they should have, but if there's a way to find a better price, we can do that. Moving on to subscriptions, $61. I would say that's pretty typical. I usually ask them to break that out just for themselves. They don't have to tell me what all their subscriptions are, but just making sure that there's no hidden subscriptions that they didn't know about or that they thought they canceled a couple months ago. A lot of the times my clients will find subscriptions from a gym or whatever that they thought they canceled and it's still coming through, so they have to go ahead and call them up and try to get it canceled again. Dues, memberships, kind of the same thing. Pet supplies, nothing else glaring red on this one. Recreation, we also just have a lot of missing numbers. So my guess would be that this person just isn't really connected to their money. They don't really know what's going on most likely, and so it's difficult for them to get in the weeds and really get into the details of their bank statements or credit card statements. Okay, so monthly payments to death, we have, it looks like a car, a credit card, and a student loan. So pretty straightforward as far as difficulty and complication when it comes to the debt. It doesn't look like we have any debt to family members, IRS. Those are always the top two priorities. If my clients have those, we usually focus on those first. We do have $500 in their savings account and $3,000 in their checking account, which is interesting considering that their income is right around $2,000. When we look at their income, it looks like they have one stream of income with a possible bonus. Typically, with my clients, their bonuses or any overtime that they can work at work is going to be the best return on investment that they can get. So this means we don't necessarily need to start up a brand new side hustle. Maybe we can just put in a little bit of extra time at work and we could make an extra couple hundred to maybe $1,000 at work and not have to start something totally new that's going to take up way more time. So I would talk to them about possibly getting a raise, possibly increasing that bonus, getting a promotion, something along those lines. And then if that's absolutely not an option, then we can start on Facebook Marketplace. We can start possibly a side hustle to increase our income, because if they want to move out, their living situation is probably not going to be super ideal for the long term, at least. We're going to want to get that income up regardless. So if we can do that sooner rather than later, that'll help us pay off debt. That'll help us save enough so that they can rent or they can buy a house. And their income, as it currently stands, they're not going to be able to do that. So to recap, first thing I would ask them about is their income and their living situation. Those two things are really going to be correlated because they really can't move out until their income is addressed. So if that's a pain point, we definitely want to start there. The second thing that I would be bringing up is their credit card. Sometimes a credit card will start at $2,000, $3,000. They get behind on the interest, or it was at one time a 0% card. It gets out of hand and it blows up. That could be what's going on here. Or it could be they bought a new washer dryer set. They bought something that was a bigger purchase. That's kind of the second option. Or their spending just could have been out of control on that one card. It's odd that they just have the one credit card. Typically when I see balances that are a little bit on the larger side with $5,600, usually it's multiple credit cards. So back to the original question, I would be asking them, what is that $5,600 from in like general terms? Is it a one-time big purchase? Is it something that just got out of hand over a couple of months or a couple of years? Or is it something that started small and we're just really behind on either payments or interest? And the reason that I ask it like that is it matters more how the money got on the card than what the balance is itself. And let me explain. If their spending just got out of control, it's been building up over the last couple of months, they are impulse buying online, that's very different from I needed a new washer dryer and I got behind on payments and I couldn't keep up with it, right? That's a little bit of a different spending habit. It's great that they don't have a bunch of other cards that we have to try and sort out and prioritize, but with the standing of their income at the moment, this is going to be very challenging to pay off with how much money they're currently making. So income, living situation, credit card, second thing I would talk about. Third thing I would talk about is the car loan. So the car loan is not crazy high, about $7,300, but again, with the standing of their income as it is right now, it is not ideal to have that much money going out for a car. I would start the conversation with, how is the standing of your car right now? Is it breaking down all the time? Is it old? Is it on the newer side? How many miles does it have on it? Let's look at the practicals of, okay, is this car at $7,300 more of an asset or a liability? If this is a 12 to 15-year-old car, it's got a lot of miles on it, it's not like a Toyota or a Honda, it's something else, this might be seen as a little bit more of a liability, and that kind of leads the conversation to, okay, is this worth keeping at $7,300? Would it be better to sell it and get a less expensive car that's really just like a commuter until we can get this credit card under control? That's a little bit of a bigger decision for them. So I might start that conversation session 1, but definitely not be making any big decisions about the car until later on in coaching, after seeing how they're handling the budget and the credit card. Credit card, I would say, is definitely the priority with the higher interest rate and all that, but the car, I would start the conversation and just kind of see what they think and what they would be comfortable with moving forward. So last piece of debt, and I don't even know if I would really bring this up in the first session as I don't want to overwhelm them, but that is the student loan. No real big red flags with their income on the lower side. That student loan payment is really going to hurt each month. I can have them look at some alternative ways of paying it off, maybe through their employer, take a look at some reimbursements or forgiveness, but a lot of times those can end up being a waste of time when it would be better to just like work a little bit of overtime, get the credit card paid off, get better at budgeting. So I would probably play the student loan by ear within the session if I want to bring that up and talk to them about that. Definitely lowest on the priority list, so I don't know that that would make it into the conversation in that first session. I would definitely talk about their income, how to get that up, talk about their living situation. Is that a good situation to be in? How long do they plan on being in that state? And then also their credit card, and start the conversation about the car. Obviously, this cash flow form doesn't have a lot of numbers on it. Now that might be just truly how their checking account or whatever the statement is, or they could have just like forgotten a lot of stuff too. So I would go line by line with them through this cash flow form, hitting on those points that I talked about with you guys. Overall though, a pretty easy first cash flow form. Looks like recent college grad, moved back in, is learning how to budget and how to do things themselves. Remember, within my program, I have recorded modules that teaches them about investing, insurance, how to buy a house, how to buy a car, things like that. So I'm not going to be touching on all of those things with my one-to-one time with them. We can really dive into their situation. I hope that seeing real life numbers was helpful for you guys. Like I said, if you want to see more of these cash flow form walkthroughs, let me know in the comments below. I'll probably do between like 3 to 5 of them, and then if the response is really strong, I can do more. But if you guys are like, meh, these are okay, they're not like blowing me away, then I'll probably move on to a different topic. So let me know. That really does change what I do, and I will see you guys in the next video.